Hey traders, Raghee here. This is the Sector Secrets Mastery daily recap for day trades for Thursday the 23rd. And as we cruise through October, as we cruise through October, one of the things I want to mention is that right now what we're seeing is a really good environment for day trades. And there's two things we can do when volatility is really unpredictable. And number one is that we can lengthen the time frame. So one way that we manage volatility in the Sector Secrets Mastery is we do daily time frame long-term swing trades. And typically that whole time is going to be roughly, say, 2 to 4 weeks. Or we can go even further out and trade via leaps or shares weekly time frames for time horizons of months to years. And the time frame is going to typically dictate the time horizon. In other words, the interval on the chart is going to oftentimes dictate how long we could possibly be in for the trend. Now, when I'm day trading, the recaps we do here, this is one part of what we do every day, the first hour of the day, and then I stop because I want to open the door to my attention and time to be able to set up those swing trades and even those long-term account growth trades. So 2 trades today. One was gold. So again, I'm looking at a 5-minute chart. Day trading is today trading, today only. And if the trade continues, I'll be out no later than 3:50 p.m. That'll be my third target in the final close. And if it doesn't make it through there, maybe we hit a T2 and pull back. Maybe we hit a T1 and pull back. You know, it's really up to the market. I don't force the market to do what I want. I just respond. We're counterpunchers, right? All right, so first up, you'll see here at 10:15, we set up GLD, and I was looking to buy a call. And all morning long, we knew that gold was pretty strong. It was positive. And all I was looking for was a pullback to one of my 3 core setups. One is going to be in the context of a trend, a wave, which is a mean reversion. The next is going to be a Darvis level. These are automated support and resistance levels. And the last is going to be an hourly price movement range. And these are my 3 core setups. I'm looking for the market to do one of these 3 things. Sometimes they may overlap, but still it's going to be one of these primary reasons. Today, we got into the hourly price movement range. And at this point, we were looking to buy at the money 380 calls. You can see here right in the alert that I gave the room. And we were going to do so when gold futures get down to 4153.7 to 4154. Now you might say, Rob, this is a GLD chart, right? Are you looking at the GLD for the trade at all? I am absolutely not. What I am looking to do is set up a GLD trade, but I'm going to look at the gold futures. And the reason for that is that if I'm looking at an early morning trade, I'm looking for something to trade between, say, 9:30 and 10:30 a.m. Eastern. I want to get a running start. I want to know what gold has been doing. I want my indicators to crunch, open, high, low, close, volume, volatility, the Darvis. I want that to really already be crunching away at 9:30, not starting fresh or using illiquid pre-market in the stocks. So here, I'm looking at GC, take a look at our range, and that's exactly what we hit right up in here. So that zone between 53.7 and 54 reached, and that, as we trade down into this zone, this predetermined zone, that's where I'm going to buy the calls. Now today, it was a great example where we hit the T1 at 41.66. We went a little bit beyond it, and then we scaled out. Now, this is what's so important about a scale out. By the way, if you are trading gold futures, and a number of our members do, you can trade the micro gold or the full size gold. This is going to be the same idea. You'll just put a limit order to buy in this zone, and then this would be 41.66, your limit order to sell to take profit. So remember, whether you're GLD trading or GC or MGC trading, same exact setup. Hit 41.66, or high actually ended up being 41.68. And boom, just like that, the trade pulled back. And you can see as soon as we get back into that entry zone, that's essentially the break even. In other words, if I got in this zone and price returns to that zone, I'm not going to let a winner, right? This is a winner. I'm not going to let a winner turn into a loser. And that's where a break even stop is just one of the most important tactical things you can do, right? And so that's how important it is not to have overambitious first targets, because then I would have let a nice winner, unrealized, turn into possibly a loser. So by being proactive with the hourly price movement range or 41.66 resistance from this previous Darvis in here, right? I'm able to pay myself when I can, not when I have to. So kind of a short story there on gold. The other trade we set up 3 minutes later. So these things were happening kind of at the same time. So at 10:18, I liked the way the RTY was setting up. And this is the RTY here, but I'm going to trade the IWM. Now you'll notice the value in looking at the IWM for a moment is to determine what the at or slightly in the money. Now I'm recording this, by the way, gang, at 7:30 in the evening. You know, we put these trades on obviously over 10 hours ago, but I want to make sure I keep up with these recordings. So this morning, when I'm looking at the IWM, let's go to today. There we go. And there we go. All right. So we knew we had plenty of bullish momentum at the bell. Here's 9:30. Plenty of bullish momentum at the bell. Moving up. What am I not going to do? I'm not going to chase this higher. What else am I not going to do? Well, some traders ask, Raghee, are we allowed to short this in the hourly price movement range? And my answer is no. We're above the previous session close. I'm going to remain directional. Let me say something about this for a moment for those of you that tend to go back and forth, long, short, long, short. It's really difficult to be able to take advantage of an overall move to the upside when every resistance level is an opportunity to buy puts or get short, and every support level is an opportunity to get long or buy calls. I would much rather stick with the directional bias of being above the previous session close. This is why I call it a line in the sand. In other words, the sentiment above it is generally going to be bullish. And you can see here, the whole idea was to be able to buy this on a dip, and right there at 10:15 and then again at 10:20. Now remember, these are 5-minute candles. So this is 10:15 to 10:20. This is 10:20 to 10:25. And right here in this window, boom, we get our opportunity to get the day trade in. Remember, we can't be slow. We can't be sluggish. We've got to be pretty decisive about these opportunities. So once we identify the zone, you know, remember, we're not going to have always 5 and 6 and 7 minutes to be able to get into a trade. Sometimes it's going to be 1, 2, maybe 3 minutes of a window. So day trading, the speed is not that I want to get in and out. The speed is actually just the fact that we're looking at 5-minute candles. And so there we buy the IWM 243 call. So I want to be at the money with the strike or slightly in the money with the strike. So hence the 243 calls. All right, well, so here's the journey. We get in, and the first scale out on, and I'm going to take us over to the RTY because that's the language of the day trades for the Russell using the IWM ETF. Let's go back to that window there. So this is that window right in here. And the first target is identified by 2476.7. I use .5. And as we go from this entry, this is the first exit. But notice I said first exit, right? Notice we have a T1. That implies more targets. I like up to 3 targets. I'm always going to price in, as I can, up to 3 targets, which means I want at least 3 contracts when I get in. All right, so there's that first target. Now, you'll scroll down here in the notes, and I mentioned, okay, T2 for IWM was 24.85, and that is right in here, right? There's your 24.85. So here's my second target, and I scale out once again, and I pay myself. So realize at this point, I've paid myself twice. Now, I'm not going to presume that a non-trending but bullish structure is going to necessarily turn into a trend. The reason I'm going to scale out pretty quickly is we have a range. Here's our resistance. Here's our support. And I don't want to presume a breakout, but what I am going to do is be open to that possibility, right? That's ideally what we're going to do. Now, for most traders, what we're going to see, and this is kind of, I want to show you both sides of sometimes the frustration of trading, but the fact that we had two really nice winners. It's been really volatile lately. So by scaling out at this level, this becomes my trailing stop. Because remember, I'm going to presume that we're going to stay stuck below this level. So ultimately what happens is this becomes basically a stop loss, but I get to pay myself here because I've locked in some profit. And even though that's a profitable stop loss, the unfortunate part is, yeah, eventually we started to meander higher. And you've seen this. I'm very open about this. I know a lot of traders like to say, I bought here and sold at the high. You know what? I call BS. No one has the ability to see the future. But what I want to at least present to you all is, can we trade in about 1 hour in the morning and find two winners? And that's exactly what we did. When volatility calms down, I'm not going to expect this kind of move back down to the first target and then a rally again. I'm not going to expect that, but I'm going to be ready for a lot of the volatility that we're seeing. And that tells me this level is resistance, and it makes sense to pay myself there, because if the Russell hits this level and ends up down here, I'll only wish that I did, right? We can't see the future. And, I think so often traders think that the best traders in the world are getting in at the lows and getting out at the highs. And I don't know where that narrative really has been spun. That's not how it works, gang. And I've been doing this for an awful long time. That's just not how it works. But what I do know is, more often than not, when we get outside of a lot of this volatility, we won't hit this level and we'll be able to get in for big moves. I think we had something like that on gold either last week or earlier this week. But I want to show you that we're not always going to get the very bottom and the very top. And so, don't put that pressure on yourself. I've been trading for 38 years, and I'm telling you, I paid myself here, and got stopped out there. And every one of those legs was positive. So at the end of the day, when I wrap up my trades, I say, hey, is there more money in my account at 10:30 or 11 than there was at 9:30 this morning? And if I can say yes, that's a darn good day, right? And that's all there is to it. So I really wanted to talk a little bit about, are we going to get those moves sometimes? Absolutely. But the thought that we will every time get that kind of follow through is what causes a lot of traders to ignore that resistance and then end up saying, oh, if we get back up to this level, I'll pay myself. Who's been there, right? Been there, done that. I'm going to take what I can, take what the market gives me. And if I can have a profitable 1 hour, I am a happy trader. All right. Yeah, I can't really draw. All right. And that's my glasses. Yeah, there you go. All right. My lousy drawing aside, thank you as always for watching. Hope you learned a little something about how we day trade in the Sector Secrets Mastery 5 days a week, 1 hour a day. Every trade I'm showing you is looking for setups in the first hour of the day. And there's a lot of very incredible things you can do in that hour without being a slave to the screen and buying and selling all day long, which frankly only makes your broker happy. If you have any questions, leave them below. Thanks as always for watching. And if you want to check out more of what we do, head on over to sectorsecrets.com. All right, gang, be good to each other.